How's it going out there, traders? This is Coach G with TackleTrading.com with a market recap for Thursday, January 7th, 2016. So if you go over to TackleTrading.com and jump into our market recap, which is posted daily right under the clubhouse, you will see not a real good day. It was a bearish day. The Dow down 2.3%. The NASDAQ, tech-heavy NASDAQ, down 3%. That's a big move down. S&P 500 down 2.3 also. Bonds were up, of course, doing the opposite of the market. What is a critical number here is look at how many advancers on the New York Stock Exchange. We only had 417 stocks up in the New York Stock Exchange, but 2,695 down with just over average volume. So what is the big news? The China markets closed only about 30 minutes after trading. Why? Well, everybody started selling, a lot of panic. But why did they close? Because they have a circuit breaker in there that if the market drops 5%, they suspend it for so many minutes, like 15 minutes or whatever. But if it drops 7%, they close it for the entire day. So there was panic. They closed it. So they only got to be open for about 30 minutes. So that's panic. That's a second time this week. So the big news is, and if you go over here and click on our news, there's more in-depth news here on our report. You'll find that they're realizing that locking out what they did is 6 months ago, they locked out the big investors. Anybody with a 5% or more stake in a listed share was not allowed to sell until tomorrow, coming up Friday. They were locked out for 6 months. Well, this week, everybody that was worried about the stampede of big wig sellers coming in tomorrow, they got out early. They're not going to be around. They're getting out. Starting Monday all the way till now, they're dumping. And that's triggering these circuit breakers to close the market down. Well, now there's news that they're going to lock them up for another 3 months. Now they can't sell tomorrow. So there is going to be no stampede. Let's see if the Chinese market mellows out tomorrow now that they're starting to intervene and saying, sorry, guys, you still can't sell for another 3 months. I'm glad I'm not a 5% or more shareholder in the Chinese markets because you'd be down ridiculous amount of money right now. That's the government taking control. I don't like it. So let's see what happens. And if you want more in depth, click the story right there. And jobless claims. Jobless claims came out today also. That was big news. Around 277,000 jobs. Initial jobless claims came in. That's between 250 and 300,000. That's normal. Natural gas. Now this has been hitting new lows. There was a draw of 113,000 BCFs. That shows demand, and we got a spike on the chart. And by the way, if you click natural gas, I don't know if you guys know this, but if you see a little symbol or something like natural gas here, you click it, a chart will pop up. There's our spike today. Look at that. Nice little bounce in natural gas coming in. Have we found a bottom? That's UNG, an ETF that tracks natural gas. Great covered call play. A lot of us have been doing this on Tackle Trading. Then you come down to tomorrow's big news, non-farm payroll. Unemployment report coming out for America tomorrow morning before the market opens. That'll cause a little bit of volatility in itself. It usually does. It's once a month, the first Friday of the month. And we have consumer credit and wholesale inventories. The probability of the Feds raising rates is only 10% in January. And we'll see what happens with the markets now that they're turned bearish. Let's look at the support. Our support is all the way down at 1867, but our resistance doesn't come in until 1993. Let's bring up the chart. Let's click on the chart. Let's maximize that. You can see right here, we have broken a little double bottom. We had a real quick hiccup in the market, a failed rally, and here we go back down. So continuously, since 2081, our last pivotal high, we've had lower highs and lower lows. We took out the support of 1993. I put an arrow in the chart there for you. I don't see strong support until we get to the double bottom down here at 1867 to 1870. Also, you guys, one of my personal favorite indicators, the relative strength on a 21-day moving average. Notice I circle it right here because that's where it broke 50, and the volume broke its moving average. Both of these are below the respected lines. That's bearishness. So we've actually been bearish just since 2081 and down, the double top there and down right below the 20-day moving average. So where's this going to end? We don't know. It's all about China. Now, when I say all about China, I put a correlation chart here. So if you want to type in FXI, let me show you where that is. Right below the S&P, there's a thumbnail. Take time to look at this. If you click this, it'll enlarge it. The red line is the Chinese market right here. Notice the pattern. Now, this goes back to October 14th, just a few months here. But notice our highs and lows and how they correlate. Look at that. We are following China. Since October 14th, we're down 3%. China's down almost 15%. But notice the pattern. It's like a puzzle. So why is it important to know that? Because tonight, the Chinese market's going to open. And you can see on Tackle Trading what they're doing to give us a hint of what we're going to do. So where do you find that on Tackle Trading? Where do you find that? You go under Trade Center, click Trade Center, and there is the overseas market, the global markets. Chinese market opens in 2 hours. Japanese market opens in 47 minutes. And they'll tell you where they stand right in there. Great little resource. Keep your eye on that. That's a heads up of what can happen in the future. As far as the markets go, they're all bearish right now. And the VIX is bullish. It's spiked up fear. A real quick note on the sectors. This is really where you find strength in leaders and laggards. Everybody's bearish pretty much, except the utilities. I highlighted that for you. Check out the utilities. They're holding in there. Some phenomenal yields on those stocks, but take note of the on-balance volume. It is negative as of today. Another down days in utilities, the relative strength could break down, and this could start a downtrend. So if there's no flight to safety, what are people going to do? Well, they're not going to stick with the market. They're going to go to bonds or something else. Also, real estate is neutral. It's hanging in there. Support at 73.50. Not bad for the winter season, and interest rates going up. Oil, bearish, of course. Agricultural, bearish. And gold and silver, all affected by the dollar, but check out gold. Gold is taking off. Is that because of global worries? We'll see. Let's see when it pulls back. If it pulls back and does a swing low above the 20, I'll start looking for bullish positions. But this is a new change for gold, actually taking off. What I'm interested in is, will silver follow? Will silver follow? It's in a downtrend right now still, but anything above 1390 or even above 1380 might create a base. We have higher lows here. Again, silver, SLV, great covered call play for myself. I enjoy it. You can own physical silver, or you can do covered calls on the ETF. I don't have to go into the rest of the world. All those charts are bearish. Here's the emerging markets and the rest of the world. Final thoughts of the market recap for Thursday. First week out of the gate for 2016, not real good, guys. So goes January, so goes the rest of the year. This isn't a good signal. Emerging markets, EEM, keep your eye on that, and the US dollar. They're still the main factors. Let's see what happens with China here in a couple hours. Are they going to find support tomorrow, or are they still going to be in a panic sell-off? So watch those Asian markets. A lot of great yield-bearing stocks out there. Take a look at the dividends. That's going to be the first attraction to the stock market, is who's paying the higher dividends. There's a lot of them out there, 5, 6, 7% annual returns, especially in your utility companies. Other than that, our option report is kicking butt. I don't know if you're following the option report, but we have been taking profit and locking in profit and protection right here in the trading forum. I post my personal trades that I do in one of the accounts right here in the option report. And here's where we discuss what we do on managing them. Option report, trades, and adjustments right there. Look at this today, guys. Here we are for Thursday. Triple M. We locked in our profit by bringing our stop down. ADSK, Autodesk, we took 40% off. I took 40% off that and put the stop in to protect the break even. We got a cash flow trade here on UVX and USO, and our debit Condor. Expedia, another 40% we took off that, and still in the trade. We are kicking butt in our option report. I hope this market is treating you as good as it's treating me. Know what you're doing out there. Do not approach a volatile market without education. And stay tuned for more of TackleTrading.com.